Now, Iqbal mentioned the Chinese saying, the fish rots from the head. There's also another Chinese saying, which is crossing the river by feeling the stones. And that was used to describe China's approach starting from the end of the 1970s towards reform and a more market-driven economy. We've also heard from various speakers this morning about the focus on China and its evolution as a market. And I'm very happy that we have 5 people that have much more expertise and knowledge in this area than I do. So I would like to welcome them to the stage. The session will be moderated by Ben Simpfendorfer, who's the Chief Executive Officer at Silk Road Associates. So please welcome Ben and his next panelist to the stage.
Well, welcome everyone. I'm absolutely delighted to be moderating today's China panel. We're meeting at a point at which China's economy has slowed, but continues to expand at 6%. Last year, the economy expanded at a rate that added over $1 trillion of value to GDP. That's a figure that's more than the GDP of Saudi Arabia and Turkey combined. So there's no doubt there's opportunities. But we're also meeting at a point at which there are risks on the horizon. The US-China trade war is no doubt a concern for many. So it's with great pleasure to be able to introduce 4 veterans of China's investment industry. Now, I've lived in Hong Kong for 20 years, and I've yet to see such a stellar panel as we have today. So I'm absolutely delighted and looking forward to today's session. Can I introduce Guang, President and CEO of Brightsphere Investment Group with over $200 billion under management. Gang Chu, COO of CICC, China's largest investment bank. Erhfei, founding partner and CEO of Asia Investment Capital. And finally, Wang, founder and CEO of CICC Capital Group. I'd also like to thank Guang in particular and Brightsphere Investment Group for putting together today's panel. On that note, Guang, can I start with yourself? China's economy continues to grow, continues to evolve. For a global asset manager such as Brightsphere, where do you see the greatest opportunities?
Thanks, Ben. For us, we are listed in New York Stock Exchange, a traditional asset manager with, from fixed income, equity to alternatives to timber. We look at China from 2 angles. One, of course, it's a great place for our team to invest in there on behalf of our clients. But secondly, in terms of asset management industry, China is going to be a very, very attractive market for us to build asset management practice there. As you know, China's asset management industry were likely to grow at least 12 to 15% a year, compounding going forward. The fee you can get there is much higher. So it's going to be a very attractive market for a global asset manager like ourselves.
You know, and the market is no doubt attractive. At the same time, we've seen a lot of policy reform this year. We expect to see more over the coming 12 months. Gang, where do you see priorities changing? What are your expectations around policy reform over the coming 12 months?
Sure. Now, obviously, China is now experiencing a lot of change, and China is now focusing, instead of on the speed of the growth, is really focusing on so-called quality of the growth. Now, that really refers to more of consumption, less of an investment, more of new economy as opposed to old economy and all of that. And that will make the China's growth more sustainable. And to drive this transformation and change, China needs a lot of reforms. There's still a lot of the government agencies are working on various kind of reform agendas, and there's so many of them. There's SOE reform, there are healthcare reform, there are various kind of reform. But to me, I think one of the most important reform that actually is being implemented in the pipeline that is important to investors is the financial aspect and capital market reform. China, at the end of the day, is a very high saving country. 45% of the GDP, $14 trillion GDP, is in savings. So there's a tremendous amount of capital saving available for investment for China to drive China's growth. But the problem is all these savings ended up in the banks, and the banks tend to do lending, cause overcapacity. Banks basically is driven a lot of investments lead to overcapacity, lead to even pollution, let's call it, right? So I think the key is to connect the pipes of all these tremendous amounts of savings into a more productive, especially long-term equity investment into China, just to deleverage, right? So I think the Chinese leadership is fully aware of this, and there are a lot of recent reforms in capital market, in financial sector, in terms of driving long-term investment, capital formation to support the economy. I think that's something that investors should be focusing on.
And unlocking those savings, as you say, it's so fundamental. One of the challenges, of course, is to think about where can those savings go, as you point out. And I know Erhfei mixed ownership reform is creating opportunities, particularly in the private sector. How do you see that as an opportunity, as an investment class?
Yeah. Just a word of introduction. We are a private equity firm. We manage about slightly over $2 billion. And our investors include AIIB, which is the Asia Infrastructure Investment Fund, and Ministry of Finance of China, and other institutional investors. We tend to focus on transformational investments, both in China and outside China. We obviously, there are a number of transformational opportunities in China, including in the new economy sector, which I think Ran is going to focus more. We focus on mixed ownership reform, where we transform state-owned companies into more efficient companies. And we tend to take majority control when we invest in these companies. We change their incentive structures. We increase their operating efficiency. As a result, we stimulate further growth, particularly in the context of slowdown in the Chinese economy. Where do we look for growth? We are looking for transformational opportunities. So that's we see a good opportunity in the mixed ownership reform.
Fabulous. And you've mentioned technology, both Guang, Erhfei. It's such a key sector for China. We're seeing such rapid development over the last few years. Alibaba listed just recently in Hong Kong, and I think it was $13 billion. Ran, is the market overhyped? Are the technologies genuine? Is it a transformational sector?
Well, we still believe technology is very transformational in nature, even though the market, if you're talking about the valuation level in the past couple of years, it certainly has seen quite a bit of hype, which has been corrected beginning this year. I think if you look at the overall market activities this year in terms of the new funds that are flowing into the primary market, we've seen about a 25% reduction in total volume. And then if you look at the total amount that's being invested into the companies on the primary market, the reduction is even steeper at about 50%. So clearly, there has been a slowdown in venture capital and private equity investments overall, even though there are new themes emerging. And certainly, a lot of the new themes are being driven by technology. For example, I'll give you one example, enterprise services, SaaS, which is a very important and prominent theme in the US capital market. It certainly has undergone significant underdevelopment in China, and now there's quite a bit of catch-up that's being played out. And I think over the course of the next 5 to 10 years, we're going to be seeing more players becoming prominent and achieving a significant size in that space.
I mean, it's clear that there are opportunities in the market, but we can't overlook the risks. I was with the U.S. Minister of Department of Commerce, the head of the China desk in Hong Kong, having lunch at one of Hong Kong's major terminals where throughput has collapsed by 10% because of the US-China trade war. So there are some genuine clouds on the horizon. Guang, we're looking for a trade agreement, and there is a tendency to focus on trade, but what are the chances we get financial sector deregulation? What are the opportunities then for global asset managers to come into the market?
Yeah, absolutely. I think one positive outcome from a trade agreement, if there is such agreement, which I do think there will be, is more deregulation of financial sectors, particularly lift the ownership restriction on foreign asset managers, for example. The current plan is that next April, a firm like Brightsphere, like us, will be able to establish 100% owned mutual fund company in China. As you know, in the past, there has been ownership restriction, initially 33% and 49%. And our business is really people's business, be able to have that control, to be able to follow, compliance issues. It's very important. So I think that would be a major accomplishment in terms of for our industry be able to have a majority or even 100% owned mutual fund company or asset manager in China.
It's all very promising, and yet there are obviously areas where we may not get reform, and one area I'm most concerned about is the technology sector. Ran, people do talk about a US-China technology Cold War. How real is that? What's been the impact of disputes on cross-border investment by either Chinese or US tech investors?
Well, it's pretty real. We have a team that's based out of LA and San Francisco, and their feedback is that when it comes to attracting Chinese capital into some of these high-tech companies, the primary response they get these days is that if it's coming from the government or any sources that's even remotely related to the government, they want to stay away and stay clear. I think the current market sentiment is that if you're in the real high-tech sector, that's in general tend to be more sensitive, then it's probably a good idea to stay away from the Chinese capital, even though the capital from APAC, that entire region, is still prominent, particularly the Korea and Japan is becoming more active in that regard. But leaving hardcore technology aside, I think there is still a tremendous amount of interest from the US companies in terms of not only attracting Chinese capital, but also working with Chinese partners to bring their products into the vast China market. And with that, in that regard, I'm talking about consumer brands, for example, which is becoming quite a phenomenon in China because younger generations of users and customers are staying away from the more traditional brands, and there's this crop of new brands emerging. And to that extent, a lot of the US brands impacted by the influencers are also looking at the China market and want to work with the Chinese partners to jointly tap into that market. Biotech is another sector, all the innovative drugs. We have, as one of the leading privately held investment banks with an asset management business, we have the largest healthcare investment banking team in China, and we've seen recently a lot of interest from US biotech companies wanting to work with Chinese pharmaceutical companies to bring their products into the China market.
And look, the US-China trade war has also spurred talk of a decoupling between those two economies. Guang, that's really quite critical, especially for this region, where US Federal Reserve policy is very important to Gulf economies, and yet at the same time, China's oil demand is a major driver of growth here. What are the risks that the US-China economy do decouple as a result of tensions?
Sure. US-China trade war has been going on for a year and a half. And China's export to the US dropped by 11%. And US export to China dropped 25%. But in the grand scheme of things, Chinese this year's total export dropped only 0.7%. And US total export to the world dropped only 1.4%. So, all these things are going on, but in the grand scheme of things, I think the world is coming by. If any of these decoupling or disruption of the supply chain that is actually in the process of happening, it has been happening slowly. Certainly, I think in the media and we heard a lot about the outsourcing of manufacturing, especially on the low end, from China to Southeast Asia. But that has been going on for more than 10 years. And maybe it's not a bad thing for China for that to happen. Sure, these things can be exacerbated, can actually go faster. Obviously, if you are a prudent businessman, you certainly have to make arrangement to make sure your supply chain is well suited, no matter what happens. But so I think we know in the medium we talk a lot about this, but there's something happening in China as well. What about Chinese inside China? What's the supply chain things that is happening there? I think two things I think is stand out. One is on the technology side. I think, for example, when you look at a semiconductor demand, China final demand for semiconductor sector, China demand is two-thirds of the whole world, and obviously import a lot of semiconductors. But with what's going on today, a lot of companies actually are sourcing their semiconductor demand in China, inside China. So you will see a boost of local semiconductor companies, whether it's design or foundry, and many of those businesses start to grow a little bit faster. Another, a very interesting example, right? So nobody would imagine that anybody can replace Microsoft Office, right? But because of this friction, there is a Chinese company established in the 80s, but obviously in office software space, you can imagine in the 90s and 2000, because of growth of Microsoft, so their company barely survived. But because of the mobile, because of young people are more comfortable doing all these office application on the run, so the company has been doing well, and especially because of this friction, this company is actually doing well. The revenue grows 50% a year over the last few years, and it was listed recently in China. The price tripled. So what I'm trying to say is, to a business, when a seismic change that is happening, there are always opportunities for businesses to take advantage of that disruption in supply chain and make it better.
And you mentioned about China outbound investment into Southeast Asia, into manufacturing, and that's certainly a theme that we've seen over the last 5 years or so. Chinese investment into Asia, Middle East, into Africa, into infrastructure, into manufacturing. Erhfei, I know you have sort of a unique viewpoint on this, given your relations with the AIB, given your portfolio of investments.
Yeah, just follow on the last subject, the US-China trade war. We believe our working assumption is that tension between China and US is likely to continue, if not getting worse. That destroyed a lot of opportunities, also created some new opportunities. For instance, in mixed ownership reform, a lot of the Chinese companies, government-owned companies with significant sales in the US are saying the American administration is likely to crack down on SOEs with sales in the U.S. So let's privatize. So we've just participated in the privatization of one of these large companies. And in addition, that's also going to accelerate Chinese investment in the neighboring countries, because in the U.S. we're not looking at. Before the trade war, we were looking at a lot of opportunities in the U.S. Now we are looking at less, not because we don't like the U.S., but because we don't like the political uncertainty there. We don't know where the red lines are, and those red lines tend to be moving. So we tend to stay away from investment in the U.S. and focus more of our attention in Southeast Asia.
And which sectors excite you most in Southeast Asia?
I think that given our affiliation with AIB and also our transformational theme, we focus on the infrastructure and infrastructure broadly defined, including digital infrastructure. So it's very broad. It includes the tech.
Digital infrastructure really is important. And Ran, I know Chinese technology firms, Alibaba and Tencent in particular, have been making big investments across the region, Southeast Asia as well as South Asia. Is this a trend likely to continue? Will China capture or beat US technology companies to the market in Asia, Middle East, Africa?
Well, we've certainly seen a rising interest level amongst the Chinese investors as well as the strategics moving into Southeast Asia and also India to some extent. I think the interest in the MENA market is also going to rise as a lot of the Chinese companies, particularly in the e-commerce space, are already venturing out to this part of the world. So overall speaking, I think the technology, from a technology perspective, even though that's not really an industry, I totally agree with the comment made earlier by a gentleman here. I think the overall interest in the market outside of China is going to rise as well.
Guang, if we could focus again on Asia, Middle East, or Africa, where do you see the opportunities? I mean, clearly as a US-based investor, you're looking at market-friendly opportunities. Do those opportunities exist to tie up with Chinese companies, to invest into them as they go abroad?
Yeah, absolutely. I think for us, let's say for the Middle Eastern investors, if you're interested in China, one way to do that is to work with a US established firm that's focused on China, because at the end of the day, you're still talking about US and China are number one, number two economies, and the big established US firm tend to be highly regarded and accepted in a country such as China.
And we've spoken about money leaving China, looking for investments in the rest of the world. What about money going back into China, Guang? Do you see opportunities there?
China, as I mentioned, is a huge, with tremendous amount of savings, about $6 trillion US savings each year. Now, why would Chinese need international capital, right? I think the government realized that by welcoming financial competitors, international capitals, will make the Chinese capital market and financial market work more efficiently. So that's why over the last few years, Chinese government has been opening Chinese capital market to the international investors via stock connect programs, bond connect programs. For example, 3 or 4 years ago, international investors only exactly 1% of Chinese stock market capitalization. Today, 3, still small, right? But still, I think it's important. All these international capital is an important contributor to make the Chinese capital market more efficient, right? We did analysis recently. We look at the top 100 stocks that has a higher percentage of international ownership. They perform a lot better than the market in general. Because in China, the local market still has a lot of people chasing hot tips and all of that. So I think overall it demonstrated also since from 10 years ago when QV investors, qualified institutional investors coming in, it has demonstrated that global investors focus on value, focus on long-term investment has worked. And that has demonstrated and also make the Chinese capital market allocation more efficiently.
Then for our Middle East investors in the room, and as a final question, just 10 seconds from each, can I ask, starting with Ran, where would you put your money? What advice would you give to the audience?
I really want to highlight healthcare because starting 2022, 3 years from now, there will be 20 million Chinese population turning in over age 65. And the newborn, starting this year, is going to drop below 11 million. And today, the population over 65 years of age is only about 12% of Chinese population. It's going to get to about 24%, doubling where it is today by 2040, and probably close to 30% by 2050. So huge opportunity for healthcare.
Fabulous. And recognizing we're almost out of time, Erhfei, what advice would you give?
We like our investment strategy at the moment. That is to focus on mixed ownership reform in China, taking majority stakes, particularly those SOEs that's going global. That goes to our second investment theme. That's following the Chinese, working with Chinese strategics in making investment in selective international markets, particularly in Southeast Asia.
Fabulous, thank you, Guang.
I would not pick a sector. I would say quality. I think in China is a giant economy. There are winners in almost every sector. The key is to follow quality.
Thank you. Finally, Guang.
Of course, for me, it's asset management industry. You will have exposure to all industries underlying. Yeah.
Thank you very much, gentlemen. A fabulously insightful session. Round of applause. for our guests. Thank you.
Thank
I
you.
could invite everyone off the stage. Thank
Yeah.
you.